Hello, my name is Pedro Robert and I'm the founder of Wealth Insider Network, and in this short video I'm going to reveal to you the 5 deadly mistakes that most new investors make which causes them to lose money on the stock market. Because after having spent the last 30 years managing investments for some well-known companies and private individuals in the UK, in Europe, in the Far East and North America, I can assure you of one thing: it is not through a lack of intelligence that people make bad investment decisions. It's through a lack of proper information. But not to worry, because in the short video I'm going to reveal to you what these 5 deadly mistakes are so that you can actually avoid them and that you can make strong investment decisions which will allow you to achieve your financial dreams. Whether you're young or old, whether you're rich or just getting by, whether you have zero experience or some experience with investing, if you'd like to learn how to generate real wealth on the stock market, understanding these 5 deadly mistakes is going to be extremely valuable to you. 99% of the time, they lose money because they fall victim to one of the 5 deadly investing mistakes that they make without even having realized it, that causes them to experience devastating losses, not to mention feelings of personal failure, excessive stress, worry, and of course regret. The first deadly mistake is paying too much attention to the financial media. Digesting financial newspapers, magazines and TV programs can certainly help you gain a greater awareness of what is happening in the investment space, but very often these publications and programs give many people a false sense of knowledge that really causes them to invest in areas they don't fully understand. So while it's always good to seek to educate yourself, please keep in mind that the financial media generally only provides surface level explanations of what is happening in the financial markets. After all, there's just only so much they can actually cover in a 30-minute TV program or a 1-page magazine article. So whether you're getting a hot investing tip from a popular financial magazine, a primetime TV show, or even a friend at work, it's always important to dig deeper and to learn more about the investment that you're about to make and ensure that it lines up with your own personal goals and dreams. Now, the second deadly mistake is trying to time the market. So let me explain. Of course, in the perfect world, if you could perfectly time the market, you would only buy a stock at its lowest price. And then, of course, you'd only sell it at its highest price. But the fact is, that is simply impossible to do. The real secret to profitable investing is to identify which stocks the market is currently undervaluing and to buy those stocks and to hold them while they are currently priced low. And then, of course, to actually sell them when the market starts, to understand the underlying value of the companies that they actually represent. So now let's move on to the third deadly mistake, which is simply having a very short time horizon when it comes to investing in stocks. Now, many new investors to the stock market like to treat it as a casino. And what is their aim? To get rich quick. And because of this, they focus on trying to find stocks that they are very positive will go up in price. And then they stress themselves out by monitoring them like hawks to make sure that they sell just at the right time, making the big money they're looking for. Now, these guys really aren't investors, they're traders. And it's an extremely risky business. And it's the reason why a lot of people lose a lot of money when it comes to entering the stock market. You see, the fact is that trying to get rich quick as an investor simply doesn't work. If you want to make serious money with investing, you must adopt a get rich slow approach. Instead of chasing after short-term gains, your goal should be to buy and then to hold onto an investment for a longer period of time. Now, Warren Buffett offers some very sound advice with this regard. He says that you should only buy an investment that you're prepared to hold onto for a lifetime. Now, let me just put that into perspective. I would typically hold a stock for anywhere between 3 to 24 months before I considering selling. So now, moving swiftly on to number 4, which is focusing too much on recent past performance. if a particular investment has persistently increased in value over the past few years. An inexperienced investor may say to himself, if only I had bought this 3 years ago, I would be sitting on a pretty good return by now. And this feeling of a perceived loss, that they've missed out on something, is what actually motivates them to invest right now. But just because an investment has shown a recent history of great returns does not mean that those great returns will continue into the future. If you buy a stock today, for example, you may be investing in it as it hits an all-time high and is about to hit a downward cycle. So instead of making emotionally driven buying decisions based on recent past performance or perceived loss of your financial goals, then you should have a more disciplined approach. After all, if you simply invested based on past performance, it's a little bit like asking somebody to drive a car using only their rear view mirror. The chances are you're definitely going to have an accident. So, let's move on to the fifth and final deadly mistake, which is avoiding investments that are forecast to lose money over the short term. Now, this may strike you as being strange, but if you're looking at a stock that's plummeted in value, say 10 or 15% over the last few months, and it's forecast to lose even more money in the coming months, this stock may, on occasion, actually be a good investment for you. You see, the market is often very short-term in its outlook and pricing. The market often only looks a few quarters ahead when they're actually evaluating the value of a stock. And because of this, there are many times when a stock will be undervalued when in reality it is a perfectly sound investment from a fundamental financial point of view. These kind of stocks, which have been undervalued by the market and are financially sound, give people like you and me an amazing opportunity to actually make significant gains over the longer term.
So, as you can see, these are just the top 5 mistakes that new investors make, but there are many more that could trip you up on your investing journey. At the Wealth Insider Network, we help you to avoid these mistakes so that you can invest with the confidence that you're not alone and that you can ride on the shoulders of experienced, successful and long-term investors. To find out more about the Wealth Insider Network and how we can help you, please click on either of the orange buttons that you can see below. Looking forward to seeing you on the inside, and thank you. Are you still here? Please click on the orange button right now, because I can assure you it's definitely in your best interest. Thank you, and I look forward to seeing you on the inside.